global asset market or asset prices are rising strongly. It is rare for a variety of assets to rise at once like this. The asset market is overheating as cash flow wherever there is money. As the price of a real commodity rose, everything really becomes a reality. However, the real economy stagnated due to prolonged coronavirus infection. In the midst of soaring price, there is a stock market that is continuing its high altitude. Wall Street broke a new record, saying the day was far away. The cryptocurrency market is also rallying. Dogecoin, created by software developers as a joke, has fueled the price spike as investors from around the world flocked like bees. Fed Chair Jerome Powell has made several pledges to maintain the ultra interest rate stance until 2023. The U.S. government and Congress are also releasing money into the market with trillions of dollars of astronomical fiscal stimulus. They thought that the priority was to raise the U.S. economy, which was once stagnant, rather than fear of the asset market bubble. Therefore, there is also observations that the current overheating pattern will continue for some time. Many investors are not convinced that as long as interest rates remain low, there is room for further increases in asset price. It is worth paying attention to the recent remarks of the head of U.S. Policy Authority. It seems that they are responding with a script written in advance. On April 28, Jerome Powell, chairman of the Federal Reserve, said, "We are paying more attention to inflation than before, but the stance of easing monetary policy has not changed." On May 3rd, less than a week, Finance Minister Janet Yellen drained the steam, saying, "We may have to raise interest rate a little." Mr. Yellen steps back, saying that his remarks were correct. However, these remarks, who a former Fed chairman, could not have come out so rightly. Instead of Chairman Powell, Treasury Secretary Yellen carried a gun and issued a warning sign to the market. The U.S. Central Bank, the Federal Reserve System, warned that the recent surge in stock market and asset markets, such as virtual assets, could turn down sharply. The Fed warned on May 6th that the rise in the price of assets, such as stock, is raising a threat to the financial system. The Fed released a semi-annual report on the financial safety and diagnosed, although the U.S. financial system gradually remains stable despite the spread of COVID-19, future risk may increase as the price of some assets, such as stocks, rise. The report points out that as the U.S. Treasury bond rate fall, investors bought stocks, corporate bonds, and virtual assets, and the price of these assets were high compared to historical standards. He said, "In this situation, if the risk-taking tendency falls and the desire for investment falls, the price of assets may drop sharply," he said. This contradicts Chairman Jerome Powell's recent remarks that as long as the market interest rate falls through, the current asset price valuation is justified. The Fed once again emphasized that the COVID-19 situation can act as a variable in the austerity debate. In addition to the overheating of economy, it is necessary to prepare for the possibility of deteriorating COVID-19. Even in this case, asset prices are inevitable due to the recurrence of coronavirus. The Fed was concerned that if COVID-19 spreads again, insurance company and hedge fund with high proportion of borrowing would be more at risk, and money market fund withdrawal could occur. It is to prepare for the possibility of asset price adjustment due to the instability of the asset market due to the inflation concerns caused by the overheating of the economy and conversely the deterioration of corporate performance due to the preparations of COVID-19.